Okay, so we're going to look at the trade I did yesterday, okay, which is the 22nd of May. So basically, what I expected was I sat in front of the markets from like 7 to 8:30. So we took out London High, have a balance price range right here, so you can say that this is the Venom setup. Then the second stage distribution, trading towards the London lows, and then the Asian lows. And you can see that I typed out here saying that by 8:30 we'll probably tag these two lows, and it done so. So right now I'm just typing that after we have the Judah swing, we do not buy right away, okay, even though we are bullish. We wait for signs and price signatures to tell us that okay, it might want to go up or not, okay. So this is my first entry. First entry was a going long, but actually this was a nice trade here, 950. London high respected right to the tick. Okay, beautiful price action after we had displacement of the time distortion during 9:30, and it displays off the first presented fair value gap also. So we had all these unfilled gaps, and then we have this balance price range right here. So actually there's nothing much to doubt. But why did I not use this as an entry? Because this I could not afford this entry. It was like a 20 plus 30 plus points setup. So I just couldn't afford it. So but I was sort of measuring the midpoint of each year that time, and when it reached it, it just rejected higher and did not give me chance to just mm, participate. So I waited for the next setup and we did not get it. So until here we have a BC. So I it just traded up, and I want to see it close above this new week opening gap. Okay, 18th of May new week opening gap, and it done so. So we have a BC right here. So I just use this as an entry. I was looking for a small scalp towards the weekly premium level, which is this green line. This green line is the weekly premium CB low, and this was the first trade, and you can see that I got stopped out. Anyways, actually you can have chance to use this as an inversion fair gap to mitigate alongside with the yesterday's first presented fair gap and also the 18th of May new week opening gap. So three stacking confluence, and this PD array makes it valid. After this immediate rebalance snaps down, immediate rebalance again snaps down, fair value gap snaps down, trades to the midpoint, equilibrium, first discount, lowest hanging fruit objectives. Okay, so today was a -$68. Anyways, in the course of two trades, I consider that a win also. It's a very small loss and with a potential of quite big profits also. So the second trade was that I was trading at the high of the daily BC confluence. So it's this level 21237, and I was buying at this BC because time is almost close to 10:30, which usually marks the low of the day or high of the day, and we already have maximum carnage done, which is sell side is already taken fully. So at this point, really not much of a reason for it to continue going down. So I just bought right here 2121214, which is inside this BC, because I was looking at this as a turtle soup entry. And then we have London High also. So I was expecting the same thing as what happened here after I went long, and it stopped me out. Then only trade a bit higher. So it's just like that. I just lost like $68, and I decided not to trade anymore, even though I feel like there's a trade because I already have not much bullets. So I decided to just follow my model, and this is the two trades I took yesterday. And I just want to say about this trade is I did not accept a full stop out. Okay, once I enter with this BC, first when it dunked into it by a bit, and when it traded through the new way opening gap, and it closed, okay, and it closed as a big candle like that, I shift my stop loss up already. And then when it traded back up, it gave this a immediate rebalance, and it did not looks like it wanted to close outside or inside this BC. So basically, I was looking at whether this is being treated as a inversion failure or not. If it is, I'm in trouble already. So it indeed done so. That's why you can see that the red arrow here is I just closed the trade permanently. I just closed the trade manually. I did not accept a full stop out because I know price is going to turn. So yeah, basically that's about today. So yeah, the pre-market was very nice. You know, I pan out every single candle. Every single candle was as how I wanted it to go. Low resistance run, and yeah, I feel like I missed out the move. No, but what I feel like is now there's a potential for me to, like, if I have an expectation of a trending day, maybe I can, I can just trade the 8:30 and just hold it towards the for the whole session, or hold it until we have where we want to see price reach. So basically, if I have a draw, I can just trade it. So that's my current thinking right now, man. Yeah, good self management, good trade management, and yeah, basically when this candle right here, okay, I did have that feeling that I know that I might be offside. So I just decided to listen to my analyst and just cut the trade. Because I realized many times that by doing so, it makes me feel better immediately, and also that it is not that it's not that my body have problem or what. It's just that it's the analyst that I trained so long in me just telling myself that, okay, this is right now, I'll trade in trouble water. So what should I do? No, either I trail the stop loss, either I close the stop manually, depending on what trade we take, what kind of context we have. So yeah. So yesterday it was a losing day. I took two trades. One trade I lost like $24. It wasn't a full stop out. Okay, it was, I had the feeling that my analyst was telling me that, hey, you're probably in trouble. So I just closed the trade and I looked for another one and I executed. And another one was the same thing. It was a stop out. So resulting in a lost day, but actually I sat down there from pre-market until the end of the morning session and basically outline everything I have in mind, everything in my anticipation. Anticipation was panning out from the pre-market session. Judah swing taking out Asian and London lows, then trading higher towards the opening range highs, the relatively equal highs, and also a 15-minute CB. So my thinking is, okay, since this happened and I took two trades and it just resulted in a very small loss, say in total like 1.5%. But if it was a winning trade, it's going to yield more, so it was a good risk to reward, definitely. But yeah, I want to try to hold to like get into trades early and hold throughout the whole session when we are expecting, when we have an anticipation. That's what I'm thinking right now. And because even before I see the chart, I did have a thinking like what can happen, and it took place just like how I expected. So this gave me a thinking that yes, right now if I place life risk behind my trade ideas, and if it pans out, it's going to be a very good risk to reward, and also my losses can be mitigated easily. So yeah, that is what I'm thinking right now. And during my second trade, it was a stop out, but I was trading right at the new week opening gap low with a BC right there. So basically was expecting some continuation towards a weekly target, and obviously we did not get it, and I just got stopped out just like that. So again, this week was a losing week, but I still have the account. I did not blow the account, and I actually still feel like trading after I lost, but I have no more bullets to shoot. So yeah, I would say every trade I risk less than 1%. It's a pretty good starting point right now. And same thing, I'm very confident in a low resistance run I can cover most of my losses. So I'm just gonna keep doing what I'm doing right now. Stick to my model, stick to the same rules, everything. And yeah, we'll just see how it goes. So I'm feeling like I'm on track right now, trading one contract, just managing my risk and trading based on the price action. Yeah, I'm feeling pretty good, pretty happy about how where I'm going towards right now.